Hello, Parallax traders. Robert here with a quick bite-sized lesson. I wanted to cover a concept that I use very often in my own trading, and that is the concept of the right look. I know that a lot of our members in the Discord chat are quite new to Elliott and are still learning and getting started and developing their own Elliott Wave trading plan. So I wanted to cover this idea as I feel it's quite important when we're out on the charts, not only trying to count waves, but also looking for those best, highest probability trade setups. So what do we mean when we say the right look? Now, wave counts are, of course, dynamic. If you've been trading Elliott Wave for any amount of time, you know that no two waves are exactly the same. But that being said, we do want to make an effort to hunt for those setups and those wave counts that look as perfect as possible, as the most like the textbook. If you've read through the Frost and Prechter textbook, or if you've seen myself or Imri or Zarez draw these idealized line patterns for you, those are the types of trades we want to see. We won't always get them, of course, and the name of the game in trading is not looking for perfection, but rather hunting for those areas on a price chart where the odds are most in our favor, where the odds are skewed in our favor. And one excellent way to ensure that is to look for those wave patterns that are as close to the textbook wave counts as possible. So let's take a look at a couple ways we can learn to recognize that balance, that right look that we are always hunting for. One way is through the guideline of alternation. So in this example, we have an impulse up, wave 1, and we have our zigzag, wave 2 down. Now, looking at the characteristics of this zigzag, we see that it was quite a sharp retracement, making it all the way down to our expected 61.8% Fibonacci retracement level. But it was also quite sharp. It reached this level. It didn't take a long time to get there. It seemed like a fairly decisive wave on the way down. So if we continue to project this same 1, 2 here, so 1, 2, 3, we continue to track this impulse as it develops, using what we know about the guideline of alternation and the balanced, rounded right look. What can we expect for wave 4? What would be an ideal pattern in this wave 4? Well, in this example, maybe we get something like a triangle. And why is this balanced? Why does this fit that criteria of the right look and giving us a very favorable trade setup? Well, this wave 4 took its time. It meandered a bit more. It wasn't as decisive and sharp as this wave 2. And if we look at the Fibonacci retracement, it was much shallower. It only made it to that 38.2% retracement level. So in this example, we have a nice look. We have that right look that is nicely balanced through the guideline of alternation. Now, another way we can use that same guideline of alternation to find those setups that have the best look and the best probability is to look at the subwaves of a pattern. And in this example, we have a zigzag standard ABC pattern. And wave A is sharp, decisive, goes up and to the right, more or less one color. Then we have our corrective pullback in wave B. So as we're tracking this pattern in real time, we can ask ourselves right here at this point in time, what characteristics, what type of wave am I looking for to have the highest probability outcome? If I'm looking to trade this to the downside, let's say maybe entry here, stop loss here, targeting something toward the bottom here, what do I want to see to feel the most comfortable about this trade? Now, if wave C was very sharp, I'd want to see a final portion of this pattern to meander a bit more, to not be as decisive as this wave A. I want to see clear pullbacks, not just a straight shot up. And the reason is, again, that fits the category of the right look. So a good way to compare that, or a good way to understand that idea in this example would be to flip the characteristics of this final wave C and this wave A. Let's say instead of tracking a zigzag that looked like this, sharp wave A, wave B correction, and a slower, less intense wave C, instead we had a wave A that was slower, less intense, took its time, clear 5-wave division, wave B down, and wave C was the wave that took off to the upside. Little to no pullbacks or visible pullbacks, and it was all one color. Now, if we were to trade both of those zigzags to the downside, of course, according to your trading plan, but something like this perhaps, this first example, this zigzag has a much higher probability of working out in your favor because it has, again, the right look. Its price action is slowing here. The market is saying, yes, this is an impulsive move to the upside, but we're slowing down. It's the final piece of a corrective pattern compared to a slower wave up, corrective wave down, and then a wave that just shoots to the upside. I would much rather trade a zigzag that looks like this than I would something that looks like this, with wave C being the sharper, more intense portion of the wave instead of wave A. So now let's move over to TradingView, and we'll take a look at a couple other ways we can use this idea of the right look to really hunt for those high probability trade setups and maybe save us from a bad trade. So let's say we're tracking an impulse here, 1, 2, 3, 4, 5 up, completed a circle wave 1 impulse wave, and now we know what to expect next, a wave 2 down. Let's say we get something like this. A, B, C, 3-wave move down that, in all fairness, reaches what we could call it a minimum Fibonacci retracement level for a retracement, a 38.2 retracement, and it is a clear 3-wave pattern. So at this point, we might be tempted to say, all right, we have a 5 up and a 3 down. Let's look to the upside. Maybe we look to trade at the break of this wave B of the wave 2. And of course, we're going to shoot for this wave 3, somewhere up here. Now, is this a valid wave count? Yes. Does it violate any of the Elliott Wave rules? Not at all. And have we seen charts like this? And have we labeled charts like this? Definitely. But remember, trading isn't about just looking for patterns, just strictly looking for an impulse or a zigzag or a 5 and a 3. We have to take all of those pieces into consideration and look at the bigger picture and see how they all fit together. And it's also very important to consider alternatives and other options. So using what I know about the right look and how impulses and corrections and subwaves within those patterns ought to be balanced and rounded. I know that the patterns that look most like the textbook are the highest probability setups. And of course, those are the ones I want to trade. So looking at this, is it valid? Yes. But does it have the right look? Is it again balanced and rounded? And I would say no. If I saw this particular setup as it looks here at this point in time, the idea of the right look would give me, at the very least, give me pause. I would take a step back and say, well, let's take a look at this wave 2. It is a 3-wave move. It has reached a reasonable Fibonacci retracement level. I'd like to see it maybe go a bit lower, closer to the 50 or the 61.8. But in terms of time, it is very short. This correction compared to the 5-wave impulse up, it's short. It doesn't reach my expected Fibonacci level. So again, is this valid? Yes, but is this a situation where I want to risk my money? And for me, I would say likely not, because I think that there's a strong possibility that price action continues to develop into, say, something like this. Let's say we get a wave 2 as a flat pattern instead. So what we thought could be a completed 3-wave corrective pattern is in fact just wave A of a developing flat. So now we go through the same process. Now I look at this and say, this looks much better to me. This looks like a textbook example, or very close to a textbook example. We have a clear 5-wave move up. We have a nice clear 3-wave move that reaches a more reasonable Fibonacci retracement level. And in terms of magnitude and time, this pattern seems much more robust, much more full and complete because of things like how long it took to develop and the which Fibonacci resistance zone did it stop at. So I would be far more willing to trade something like this than I would to back up and trade something like this. And why did I make that determination? Well, I always keep that concept of the right look in the back of my mind. And when, at this point in time, this pattern did not have the right look to me, but this pattern did. And I would argue that setups that look like this would have a much higher probability of going in your favor. So I hope at the very least that gives you a rough idea of this concept of the right look. So of course I would encourage you to keep this idea in the back of your mind as you continue to count on the charts and hunt for those high probability setups. Because it just might be the case that instead of trading something that looks like this, the best course of action may be to wait until we get something that looks a bit more complete and has that right look about it. So again, I hope that helps. And before I go, I am very excited to announce a new product offering that we have here at Parallax. It is a group course. So for those of you who have been with us for a while now, you know that we offer the masterclass, and that is our one-on-one product offering. And we realize that that style isn't a good fit for everyone. So we wanted to introduce a product that might be a bit more accessible to all of our members in our Discord. So we decided to create a group course. Now it's still in the works. We're aiming for a start date sometime middle of next month in October. But we are very excited to get this going. I will put this link in the Discord underneath this video. Please check it out. If you have any questions, don't hesitate to ask us a question in one of the Discord channels, or you can always direct message either myself, Imri, or Zerez, and we will be happy to walk you through exactly what the group course is offering. So again, hope this helped, and happy trading.